Ramsey, great to be talking to you.
Likewise, Joe. Appreciate you having me on.
Let's tell our listeners and viewers a little bit about you and Evergreen Services Group. Tell us, what is the organization and what's your role?
Yeah, sure. So Evergreen is a pretty uniquely structured holding company that has been acquiring MSPs throughout the country. My role, I'm the head of M&A at Evergreen. So we have really three people on the senior leadership team at Evergreen. It's Jeff Totten, who founded the business a little over a year ago and is the CEO. Myself, as the head of M&A, I'm responsible for all of our inorganic growth. So growth through acquisitions. I lead all of our new acquisitions. And then we have a third member of the leadership team who's our president and COO. His name is Brad Whitwer. And the leadership teams at the underlying MSPs that we've acquired all report to Brad, and then Brad supports them post-acquisition. And then Jeff is kind of responsible for both of those things and maximizing the combination of our organic growth and our inorganic growth.
Got it. Okay, so let's talk a little bit. So you got Evergreen Services Group, but then how are you funded? Is there a large organization or a different organization that actually is acting as like the banker for you, so to speak?
Yeah. So the way it all kind of materialized, we'll go back to the beginning because it wasn't that long ago. So Jeff Totten and myself, we actually worked at a firm called Alpine Investors, which is here in San Francisco. We actually now kind of share an office. We have our own. We're on the same floor of an office building here in San Francisco with them. And so Jeff and I met at Alpine, worked together for a number of years, making investments across a variety of industries, mostly in the B2B service industry broadly, and then also in some software companies as well. We became close over our time there, and then we're fortunate enough to have Alpine back us out of their sixth fund. So we have about $100 million allocation from Alpine's sixth fund, which was a $532 million fund that they raised in June of 2017. So they're the capital provider behind what we're doing.
Okay. All right. And then in terms of we've seen a ton of activity on ChannelE2E, first of all, in terms of various private equity firms and or various investors investing in the MSP market, acquiring MSPs. Why do you think private equity in particular is so interested in this market at this time?
Yeah, no, it's a great question. I think obviously it's a really hot market as we talked about at IT Nation. And I think it's a combination of a lot of things. There's not, I think there's far from a single factor that's driving it. On the macro level, sort of outside of, zooming outside of just the MSP market, which I think is important to do anytime you talk about kind of where the market is for private companies. I think there are some macro drivers that are driving the market to be hot and interest to be high in a lot of different industries. It's low interest rates, so you're able to borrow a considerable amount of money at relatively low interest rates. You have lenders that are willing to get more aggressive. That just makes it easier to buy a private company for anyone, a private equity firm, an individual, or just a company that's trying to buy one of their competitors. And then on top of that, there's just a lot of money in private equity right now. When we were at Alpine, we would always talk about how it seemed like a new private equity firm was popping up everywhere you turn, because the returns of the asset class have been good, and anytime that you have that dynamic, you have more capital flowing into the industry. So at a macro level, I think it's always important to talk about that the market is hot across a variety of different industries. For MSPs specifically, I can share what attracted us to the industry, and
Sure.
I imagine it'll be similar to what a lot of investors that are interested in the industry are feeling. First and foremost, I think it's the shift towards recurring revenue. I think Alpine first saw its first managed IT services deal in like 2007 or 2008.
Mm-hmm.
Since then, you've really seen a seismic shift in the industry from the predominant model being break fix, hourly, more T&M model to recurring revenue. And I think that can't be understated just how big of a deal that is for investor interest. We were at Alpine. The first thing you learn when you're starting out in private equity is to buy recurring revenue businesses. Because it's just so hard to not know what's coming in the door from a revenue perspective every month. So that's first and foremost. That's the biggest thing that really drove our interest, because we saw no recurring revenue before under the break fix model.
Yeah.
Now we see 60-65% recurring revenue.
Got it.
Which is super, super powerful. On top of that, it's a large fragmented market. I think the stats we've seen are $10 billion of managed IT spend for SMBs, and it's spread across anywhere from 20 to 40,000 companies in North America. We don't really have an accurate sense for what that number is. I've heard.
Yeah, I do think it's marching towards the 40 number. So I personally got into the market as a journalist, a blogger covering the industry around 2007, specifically focused on MSPs. And at that point, we put the estimate at like 8 to 10,000, and just pure market dynamics. You look at the metrics, et cetera. I think we are marching towards the 40,000 number in US. So I'm not saying all those guys are pure MSP, but they're heavily recurring revenue at this point.
Right.
Yeah.
Right. Yeah. So that is another big factor for us. We want to invest a significant amount of capital, and it's easier to do that in a larger market. Maybe a couple more things that sort of piqued our interest. I think the trend towards SMBs in particular, outsourcing IT, and that's been a part of the driver of the growth in the industry, and just the strength of the value proposition. Anytime you can say to a small to mid-sized business, we'll do something better for you than you're doing it today, and it's going to be cheaper than you're doing it today.
Yeah.
With an in-house IT person, it's pretty durable. It's pretty durable value proposition. So that was another thing that attracted us to it.